You only have less than 6 months left to prepare for what's coming. You have less than 6 months left to prepare for what's coming. The worst-case scenario has passed, and the U.S. stock market is about to witness a showdown of titans, where gods slay gods and Buddhas defeat Buddhas. No amount of bad news can stop the powerful recovery and the market's explosive growth. If this time you still don't bring out your money to catch the bottom of the U.S. stock market, then in the next 10 years, you'll have to accept the widening class divide. You'll miss the chance to climb to a higher social stratum, and no matter how hard you try, your wealth won't see any real change. Is that really how it is? Greetings, dear viewers and friends. From FortuneCraft. Have you noticed? When everyone at the Wall Street was saying that the U.S. economy had entered a recession, and the U.S. stock market had been plummeting for over 10 consecutive days, it was only then that the U.S. Federal Reserve, Fed, spoke up. But instead of lowering interest rates to make borrowing and investing easier and save the stock market, they took an even tougher stance, warning the world that inflation in the U.S. could get even worse. What does that mean? If you do business in the U.S., your costs will keep rising. If you live in the U.S., the prices of goods you buy will become increasingly expensive. At the same time, U.S. GDP growth won't be as strong as before. People will spend less, invest less. In short, making money will become harder and harder, while prices continue to soar. This is a classic economic paradox. Hearing such a risky outlook, if you had to bet on whether the U.S. stock market would rise or fall, even the most foolish person would bet on a sharp decline, right? Yet, the moment the market opened, U.S. stocks unexpectedly surged. This shows that most people are rushing to buying as much as they can, regardless of the price. Why is that? While most people aren't paying attention to the details, few have noticed that Indonesia's stock market has collapsed, and Turkey's stock market has fallen into an even more severe crisis. This means the traps set by American capitalists years ago are now detonating one by one. So, who will be the next victim? Previously, when the Fed raised interest rates, American capitalists scooped up assets from Japan, South Korea, and Europe. Now those markets are gradually recovering, meaning the bottoming phase is over. Assets at their lows will soon explode in growth, while those that soared before will quickly collapse. The biggest profit-making investment trend of 2025 has revealed itself. But what does this mean? When investing, do we make money when we buy assets or when we sell them? Do we win or lose based on the moment we place the buy order, or is it the entire preparation process beforehand? Think of a race. If you win, is it because you ran faster for just a few seconds or minutes on the track? Why could the Qin state sweep away the 6 states during the Warring States period? Why did Bai Qi become an undefeated general, dubbed the God of War? Was it because he picked up a weapon, charged into battle, and only then decided the outcome? Let me tell you, every victory or defeat in life comes from calculation, strategy, and preparation. It's the same for college entrance exams, pursuing love, or investing to make money. If you only figure out whether you've made money when you sell your assets, you're not investing. You're gambling. If your profits depend on praying to the gods, or how sincerely you plead, that's not investing. It's just a game of chance. For true entrepreneurs and investors, they always win first, then fight. They only enter the game when victory is assured. Better yet, they make money without spending a dime, letting others earn it for them, or even having others willingly bring money to them before making a move. If they see no chance of winning, they don't fight. They might even run away immediately. So, if you don't realize that the capitalist's plan has entered the harvesting phase, whether you buy U.S. stocks, short them, or invest in U.S. bonds, you'll lose. As I said in my previous video, if you don't want to be a victim of this harvest and still hope to rise to a higher class, follow my channel. I'll continue providing you with critical information. If you're worried you'll forget after listening, and waste your time, like this video, it'll automatically save to your playlist, so you can re-watch and follow the plan anytime. First, everything that needed to collapse worldwide already has. American capitalists have nearly finished buying up the assets they wanted. This means the sheep shearing phase is over. The next phase is to quickly regrow the sheep's wool. What do I mean? Before I analyze this plan, many didn't believe it. I get that. But now, when everything is unfolding exactly as predicted, when history has repeated itself and the present mirrors it perfectly, if you missed the chance to make money in the first round, will you miss the second one too? What's the purpose of the Fed and capitalists raising interest rates? Let's say you're a European with 100 million euros. European banks only pay you 1% interest annually, meaning you deposit your money, do nothing, and earn 1 million euros in interest each year. But now with the Fed raising rates, if you convert your 100 million euros to dollars and deposit them in a U.S. bank, still doing nothing, the U.S. offers 5% interest, giving you $5 million. Your profit from doing nothing jumps 5-fold. What would you do? Naturally, you'd sell your euros, convert them to dollars, and deposit them in a U.S. bank. As a result, the dollar strengthens, while other currencies worldwide keep losing value. So, when the world deposits money in U.S. banks, what do American capitalists do? They use the strengthened dollar to buy up devalued assets and currencies globally. That's why last year, the Japanese yen, South Korean won, euro, and many other currencies in Asia and Europe dropped sharply. For example, previously, buying an asset in Europe cost me $1 million. Now with the euro devalued, I only need $700,000 for the same asset, a 30% discount. Last year, countless companies in Asia and Europe were acquired by American capitalists. Gradually, Asian and European business owners and shareholders were replaced by American ones. In other words, no matter how hard Asians or Europeans work, the money they earn ends up in the pockets of American capitalists. What if your country's economy isn't that developed? You don't have much money, or there aren't big companies worth buying. No problem. You still have natural resources. Look at Turkey, a nation rich in oil, gas, and fuel pipelines. In ancient times, seizing another country's resources meant waging war if you won. Those resources were yours. But that method drained manpower, cost wealth, and earned you the label of an aggressor. Today's approach is more civilized. When Turkey runs out of money, I can lend to them. It seems generous, lending when they're in need, but I'm also worried they can't repay me. So they must pledge some assets as collateral. If they can't pay, those assets become mine. But don't worry, they won't default because I lend at very low rates. If they still can't pay, when the loan matures, they can borrow more to cover the old debt. In 2003, Turkey still owed over $23 billion, but borrowed another $16 billion more. To secure those loans, they had to pledge critical national assets like energy, transportation, and banks to American financiers. The seeds of this plan were planted back then and have been growing ever since. Last year, when the Fed raised rates, the interest on Turkey's short-term debts doubled. Since they were short-term loans, within months or a year repayment was due. Unable to pay, they had to use resources to settle the debt. As a result, Turkey's oil and gas were snatched up by Western financiers. The gas prices Turkish citizens pay are now dictated by Western elites. Rare earth minerals, other resources, and banks were also sold off to American capitalists for next to nothing. Similar situations unfolded in Indonesia and Japan. For instance, Indonesia has the world's largest nickel reserves, crucial for battery production. When the Fed raised rates, Indonesia's rupiah plummeted, giving American capitalists the chance to buy up nickel mines with their strengthened dollars. This secures Tesla's future nickel supply for batteries. Why do American capitalists have so much money to buy up global assets? Because last year, the U.S. stock market surged. As global currencies weakened, economies faltered, and people's assets lost value. But living costs soared, especially after the war in Europe disrupted energy supplies. Global capital had nowhere to go but the U.S., the most stable economy. The U.S. government and financiers orchestrated this play. Since 2020, U.S. public debt has ballooned from over $20 trillion to $36 trillion, while Treasury funds dwindle. Where did that money go, and why? When the Fed raised rates, could American capitalists buy up the world's assets? Globally, money wasn't just deposited in U.S. banks for high interest. It mostly flowed into the U.S. stock market. Beyond the global economic downturn, leaving the U.S. as the strongest player, U.S. companies seemed highly profitable. But why, after the pandemic, when many worked from home, did these companies grow even richer? Because the U.S. government pumped massive subsidies into them. In 2020, when the Fed expanded its balance sheet and flooded the market with money, U.S. companies borrowed huge sums at near zero interest. What did they do with it? First, they bought back their own stocks, driving prices up, no explanation needed. Second, they collaborated to polish their financial reports. The government gave money to companies. One bought from another, that one bought from a third, creating a cycle. Everyone showed high revenue, profits looked good, and they paid taxes back to the government. The money didn't disappear, it circulated back, while U.S. companies flaunted impressive figures to attract global capital into the U.S. stock market. With money in hand, these companies repaid government debts. The government got funds to settle its obligations, while helping capitalists draw in international money. Armed with a stronger dollar, they bought up cheap global assets and resources. Many believe that when interest rates rise, borrowing gets harder, business and investment slow, leading to a recession and stock market crash. But reality flipped the script. Higher rates pulled global money into USAS stocks, letting capitalists rake in profits while the market boomed. Titans like Warren Buffett reaped the biggest rewards. They sold stocks at highs, amassed cash, parked it in U.S. treasuries for high interest, and scooped up dumped assets in Japan, Asia, and Europe. So, if you hastily sold stocks when rates rose, relying on economic theory, you missed last year's insane U.S. stock market rally. Look at financial reports. Many companies had low profits, inflated valuations, or even losses, yet their stocks soared over the past year. Why? In the stock market, prices don't hinge on a company's potential, but on who has more money, buyers or sellers. If sellers dominate, even the best stocks drop. If buyers have more cash, even the worst stocks rise. In other words, stock prices are dictated by the big players, We don't need to overanalyze financials or economics. The key is following the big money flow. Now the critical part. Real capitalists, like Warren Buffett, have already sold their stocks at peak prices. Who's holding U.S. stocks now? Global capital. Step 1 of the plan is complete. Raise rates, suck in worldwide money, and buy assets cheap, logically. Step 2 would be cutting rates, lowering borrowing costs, and letting U.S. money flow back to Asia and Europe, where the assets capitalists grabbed would skyrocket. But here's the hitch. The U.S. president has changed, so whether step 2 happens is up for negotiation. The U.S. Treasury is nearly dry. In months, the government might shut down. What will they do? As I've analyzed before, they'll engineer a recession, crash the stock market, and force money out of stocks into U.S. treasuries, back into government hands. But recent bank reports show money isn't flowing into treasuries. It's heading to Europe and the UK. Look at the dollar index. Since early this year, it's dropped sharply, meaning the dollar is weakening against the euro, yen, and other currencies. Why? People are selling dollars to buy euros and yen. What does this mean? The current U.S. administration is trying to trigger a recession and stock market crash to redirect money into treasuries. They keep stressing that treasury yields are at their peak. Buy now or miss out. But what about the capitalists? They also want a recession and crash, but not for money to flow into treasuries and the government. Once the government solves its cash shortage, it gains more control, sidelining the capitalists. From a profit standpoint, if the market crashes, capitalists can manipulate it, pushing stocks from highs to lows. Then, they'd pressure the Fed to expand its balance sheet and pump money in. They'd borrow that fresh cash at near zero rates and buy back the stocks they sold high, retaining market control. Crucially, when money exits stocks, capitalists would steer it to Europe or elsewhere, where they've already bought cheap assets, reclaiming them at a profit. So whether it's the government or capitalists, a stock crash benefits both. The difference? The government wants money in treasuries. Capitalists want it in Europe, Japan, and beyond. Why? Here's the kicker. Many overlook that American capitalists originated in Europe before the U.S. became the top power. Who ruled Britain and Europe? A financial aristocracy amassed vast wealth there. Call them the European Financial Alliance. They had deep roots in Europe. But as the U.S. rose, they shifted and embedded themselves in America. That's why they can manipulate Europe so easily. They never truly left. They just relocated operations. For capitalists, national borders don't exist. Only profit maximization does. These Europe-rooted financial giants in the U.S. backed supported the previous U.S. administration, which pushed globalization, printing money and spending it worldwide, boosting other economies, while their assets in those countries rose in value. But the current administration favors isolationism, clashing with the world, imposing tariffs, and forcing nations to move factories, talent, and tech to the U.S. Before, globalization meant others worked hard, while the U.S. printed and spent, with money flowing back to capitalists. Now, the new regime wants self-production and consumption, curbing these international financiers' control. Previously, the U.S. was bled by capitalists. Now, the government resists European financial dominance. So why isn't Warren Buffett piling into European assets like other financiers, instead doubling down on Japan's yen and stocks? Because Buffett is a pure American capitalist. Europe's already carved up by its own elites. His voice carries little weight there. Nor can he buy gold, a dollar substitute held by governments. That'd devalue the dollar. Japan's different. Many borrowed yen to invest in the U.S. If the U.S. economy crashes, money will flow back to Japan. Buffett saw this early, investing heavily there, even borrowing yen to buy dumped assets cheap. He's now among Japan's top 5 investors. Japanese earnings flow to him. What's the core takeaway? In investing, seek high probability wins. The key is tracking big money flows. Government and capitalists both profit from a U.S. stock crash, but Buffett's funds and European financiers aren't buying U.S. stocks to catch the bottom, or long-term treasuries. They're pouring into Europe and Japan. So why the recent U.S. stock surge? Look at the indices. Before the spike, derivative contracts rebalanced, spiking volume, but it's not telling. On the surge day, actual trading volume was low. Frenzied buying at any price, yet few real players joined. Morgan Stanley's survey showed retail investors dumped over $12 billion into U.S. stocks last week. Chinese retail investors also piled into U.S. index ETFs, like the S&P 500 ETF at Chase Securities, hitting the daily limit and halting trades. Why are small investors rushing in? Typically, a 10% U.S. stock drop triggers a short-term bounce. But for us, with big money still sidelined, and only retail jumping in, buying or shorting carries high loss risk. If this is just a retail-driven rebound, profits will be slim, small recovery range. If you don't cash out fast post-rebound, and the market dives again, you're stuck high. Shorting's risky too early, and a bounce forces cuts, especially leveraged. Shorting's tougher than buying. Only consider it if a true bear market locks in, promising a year-long slide. But even then, it's just consider. Safer bets like gold exist. Since mid-last year, I've shifted some dollars to yen. I travel to Japan often and see dollar devaluation risks. For shorts, target weak stocks, lagging blue chips. If you've missed this cycle's first half, no big deal. Holding defensive currencies preserves wealth as the dollar dips. Our endgame? Wait for the Fed to expand its balance sheet and print again. If U.S. stocks crash then, it's the biggest bottoming chance of our lives. Some say I've warned of a U.S. stock crash repeatedly. It's dipped hard, but not fully collapsed. When will it happen? I've got no crystal ball or superpowers. If someone claims they know the exact day, I wouldn't believe them. As investors and entrepreneurs, we don't need precise timing. Just bet on high probability scenarios. If it happens, we win big. If not, losses stay small. Worst case, we just don't profit much. Buffett's a giant, we're small, but our investment mindset aligns. Are our predictions spot on? How will we adjust portfolios soon? Time's up. I'll end here. I share wealth-building, business and investment insights for financial freedom. Don't miss out. Subscribe, hit the bell, and share this video. To all who liked it, I wish you financial freedom soon. If even 1 or 2 lines here help your life, I'm fulfilled. I'm FortuneCraft, and I'll see you in the next video. Goodbye.